This is Christian Farmers, Tribeca Trade Group, and this is your end of day as well as end of week market recap for you for October 10th. A little bit of a different type of day, so I'm just going to talk about the Giants game from last night and how great that. I won't do that, but I kind of want to. And let's go through the price action today. I will go over obviously what we see on the screens here today, which was a pretty big reversal day, and we'll talk about where it appears that we're going next, or what could be next. I don't have a crystal ball, but we'll kind of go through and look at some of the price action, and you can kind of as I do when I go through the Sunday video that I put out for members, try to basically just give an overview of what is, rather than what predictions I'm going to make. I mean, I will try to give you, on Sunday, I usually give you what I think could happen based on some facts, in my opinion. But really what I try to do is kind of give a good overview, and then you can kind of try to formulate some conclusions on your own. So first of all, let's go through the performance a little bit, and I'm just going to I'm going to get rid of the camera here, and so that you can see the numbers here a little bit better. I probably need to zoom in here a little bit too, although you may not want to see some of these numbers after today. But I think I'll stop being dramatic here and stop joking around. S&P was down 2.7% for the day. Qs were down 3.5%. That's a big move down for the Qs. Small caps were also down 3%, as well as the micro caps were down 3%. Bitcoin right in line with that, also down 3%. Some separation today, because yesterday Bitcoin and gold acted basically the same. I think they were both down about 1.9% for the day yesterday. But gold actually shined a little bit today. Sorry, that's horrible. But that gold was up 1% today. Look at the VIX, was up close to 32% for the day. So yes, bonds. Where were bonds? Bonds actually finished up 1.6. You can see this is for my midday note, so I have to update some of these numbers. I had 25 for the VIX. It should be 32. And then the dollar finished down 0.5% today. I think I did update this one. So a couple things here. What performed best? I mean, uranium squeaked out a gain today. At one point, this uranium ETF was up like 4 or 5% in the beginning of the day. Crazy that still finished green on the day. Gold miners finished slightly on the green today. Just a lot of red, a lot of things down more than 3, 4, 5%. Look at how many groups in here down over 3%. So just a major risk off kind of plunge lower. China internet names were down 7% for the day. Crypto's down over 5%. Clean energy, oil services was down 5.7% today. So energy really got hit as crude was down in the morning. One thing I'm going to bring up to you, and then I'm kind of going to go over the performance for the month. But I understand, like obviously there was a lot of headlines today with what Trump said and Trump tweeting out things about China. But I would also add, I don't think a lot of people picked up on this morning. China was down pretty decently overnight. It had almost looked like things were starting to kind of go for China. For instance, and by the way, all of these markets are they're closed by the time, by the early morning for U.S. investors. The Shanghai was down 2% overnight. The Hang Seng was down 1.7%. So yes, you could get mad at some of these tweets that were sent out today, but it kind of stems with what China started to do earlier this week, with talking about curbing exports to rare earths. And then this morning there was headlines too. These things kind of just got overlooked a little bit because it caused the rare earth names to move up. I was long the rare earth names, so I was quite pleased at that. But if you kind of looked below the first layer of it and said, hey, these things aren't particularly good. The headline this morning for Qualcomm was, if I have it here someplace, China probes Qualcomm for suspected monopoly. Qualcomm sells a lot of chips to China, right? So these things all started to happen. So I know, the tweet that came out today about Trump saying he's going to possibly enact more tariffs against China. He didn't start this one, right? This is China, and China started to do this all week long, and it kind of reached a fever pitch this morning with both Qualcomm. And they also mentioned Nvidia as well this morning too. So, and I'm not saying that the tweet didn't escalate things. It sure did. It kind of lit the fuse. But I think that this was already in motion by what China was doing this week. Now, look at the performance for this week. No, for the month at this point. Mid caps are now down 3% for the month. SPY's down 2% for the month. Qs are down 1.8%. The ARC Innovation ETF is still up on the month. I mean, we know that it's been a high growth type rally. It's been an AI rally, and yeah, an AI rally, and it's also been some other things that have been rallying, and I'm going to go over those. Look at the IBD 50 ETF. That was down. I don't know how much that was down today. Let me see. I think I have this over here. The IBD 50 ETF was down 4% today, but is still up on the day. Excuse me, still up on the week. It's been a long week, so have to cut me a break here. But that ETF is still up for the month, and I think that just kind of shows you how far and fast some of these things went up so far in the beginning, in the first half of this month. Right, we're at the 10th of the month. Let's begin to kind of look at some of these charts and not just the raw data, and I think that may be able to kind of help formulate things a little bit. Just make sure I've got this here. Okay. Let me just get the right screen. There we go. Trump to impose. Oh, we got another headline out. Trump to impose an additional 100% tariffs. I don't know what that's. Oh, that's bringing down markets. No, I'm glad I didn't buy the dip on anything today. So that is a. I see futures moving lower on that. Sorry, that headline just hit right now. That is here. I'll show that to you so that you could see what this looks like in case you don't have a Bloomberg terminal, and I will reshare. Right. So Trump to impose 100% additional tariff on Chinese goods. So just talking about China. Well, there you go. And again, this is retaliation. This is not, like I said, Trump did not start this week, but he's certainly coming down on the situation. All right, let me go back, and we'll go back to the charts. Now, this is going to kind of change things a bit, but it still is going to go along with what I was going to say anyway, is that you've got a major break here in the trend. Now, what have I been saying, and what have I said in some of my videos this week is, hey, the price action is my number one indicator. There's some other indicators that I'm going to mention in just a second, but price is the number one thing that I watched. And we've been closing all week long. We've been bending, but not breaking. Well, today we broke. What did we break today? We broke the 5-day moving average. We broke the 20-day moving average. We did not stop at any of these things, right? And also look at the channel that we've been in. How long have we been above this 20-day moving average? Right? We've been above this 20-day moving average outside of this first day of August, which is kind of like a whoopsie type candle, which we got that on the first day of September as well. We've been above this 20-day moving average since April, right? So this is a bit of a change here. It's a change in trend. So what did I do today? And so there is some support that we're going to be watching. I don't know if that's going to get violated in the overnight session, but or what happens going into Monday morning. But 659.49, 650.49 is going to be the level that I'm watching come next week. And we could breach this and we could reclaim it. But I'm also watching that 50-day moving average as well. So that'll be something to watch next week. Sorry, I'm just going to make sure everybody knows. So that's something to watch. But yes, this is not a situation for me to jump out in front of a moving train as we just kept on going lower through the session. There's a post that I wanted to share from Mike Webster. I thought that this was very good. He tweeted this out. This is a caption from Jesse Livermore and How to Trade Stocks. And this is a pretty good one, right? He said, a speculator of great genius once told me, when I see a danger signal handed to me, I don't argue with it. I get out. A few days later, if everything looks all right, I can always get back in again. Thereby, I have saved myself a lot of worry and money. I figure it out. I figure it out this way. If I were walking along a railroad track and saw an express train coming at me at 60 miles an hour, I would not be a damn fool not to get off the track and let the train go by. After it had passed, I could always get back on the track again if I desired. I've always remembered this as a graphic bit of speculative wisdom. Well, what are we in right now, guys? We are in a very speculative market. We've seen this AI rally go, basically parabolic to the upside. We've seen a lot of sector, and it's not all been AI. We've seen, or maybe indirectly it's been pushing up the metals and mining, but we've seen a lot of strength there. Before I move away from this SPY chart, I'm just going to mention a couple. There's a couple things here that I don't normally bring up. I bring up when they're flashing something different that's going on. So first of all, the breadth for the day. Right, and this can be, we have this part of our MarketWebs indicator, but the up volume today was 19%, 15%. That's horrible. Notice also the volume for the day. Right, to me, we don't want to see volume like this. So first of all, we don't see volume like this when you're going up. That's low volume. And you could see all along the way, we have low volume, right? That's how the market works. It advances on low volume for the overall market, right? It declines on big volume. That's how the market works. So if you ever hear one of these folks that say on Twitter, "Oh, I can't get involved in this low volume rally," it's exactly what you want to be doing, right? That's how the market works. It rallies on low volume. That is something that's been going on not just this year, for years upon years upon years. The market rallies on low volume. And again, I'm not talking about single stock. I'm talking about the overall market. All right. So couple this volume with horrible breadth, and you have to kind of go back and look when we've seen this last, right? And that's all the way back into April. Now, it wasn't just one time that we saw this in April, it was several times. So that's why I think this is not like after a number of down days. This is the first down day. So again, and I would just leave it there. It's a change, right? You're seeing a down volume, a down day accompanied by big volume, and you're also seeing horrible breadth. To me, that is a change in what we've seen, right? Qs went down more today. Now they're also breached into the 20-day, breached into the value area for the month. This will trigger the bearish 80% roll, looking for a move down to the bottom of this month's value area. So that's where I would begin to kind of look and see what happens down there. Also, the 50-day moving average is coming up into the picture. But it's kind of the same analysis as you go through. Same thing in IWM. Just as all of these were holding above their trend earlier in the week, they broke today, and it was kind of an all at once type of thing today. Next thing that I want to go over is to talk a little bit about the market breadth, right? This is something. So you could ask yourself, were there any warning signals for this? Well, we kind of went over a couple. It's been tough to say, like, oh, like earlier this week, like, there's warning signals, get out, right? That's not really practical, considering that we were still seeing a lot of things really rally, and you would have kind of been left out of some of the moves that happened this week, which were pretty strong, in leading up to today. But we started to see some of those things. We started to see deterioration in the breadth. Right? That's something that I did talk about in yesterday's video. It was the second day yesterday where new lows picked up in the 4 week 4 week new lows picked up in the S&P. And I can show this to you. Instead of going into my, well, maybe no, I don't have that up in front of me, so I will replace this, and we'll look at this screen next. Right. So today, for example, there was, now of course you would, this makes sense for the day, 185. So 37% of the S&P had a 4-week new low today. Only 8% had a new high. But here's what I want to really show, which is the chart. And you could see this is not today, by the way. There's a 1-day lag with this, but you should be able to see on your screen. Let's see if I can actually enhance this for you. There you go. Right. Look at the new lows yesterday. Right. And they were also beating, they all were also outnumbering the new highs. Right. That's what I refer to as deterioration under the hood. When you start to see more things going down versus things going up, that's usually a warning sign for the market. All right. One other thing too, which we talked about towards the right at the end of yesterday's video, I talked about how credit spreads were moving up. Now, this might make you feel a little bit, oh, it's not switching the screen here. Let's try again. Uh, all right, there we go. So this is credit spreads, right? This is, some people were talking about how HYG started to kind of move to the downside yesterday. Well, you always want to look at this in terms of the spread and what it's doing with treasuries, right? Because that, without getting into a complicated explanation here, right? Bonds are very different than equities. There's always an interest rate component to it. So if you want to see what credit is doing, you need to minimize, you need to put credit over treasuries, and that takes out the variable of what the interest rates are doing. So yes, you could see spreads are widening out here. Is this a cause for concern right this second? Well, it's something that we want to keep an eye on because we're just coming off of really low levels. Is there a trend change here? No, I don't see a trend change yet, but we'll have, this is just the first day of, or first or second day, it was second day of the move, because we did talk about this yesterday. So yeah, this is starting to move. Where this peaks out, we don't know yet, right? And that's where we need more information. But as of now, looking at this 5-year chart, there's no major change in credit spreads. All right. So yes, they are moving, something to watch, but no change in trend as of yet. What else do I want to go over? So we talked about breadth. We talked about credit spreads. Here's also another visual of breadth. If you want to look at it this way too. Again, when these things are quiet, you don't really need to look at this too much. But here's the down volume for, this is up volume versus down volume. And again, it's just another way of looking at it. Worst breadth day. So again, this is different. Notice the trend here. Right? And this is a move out of trend. So all of this kind of comes to the same conclusion, is that you've got something changing here, right? And when something is changing, going back to the example that I just gave with reminiscences of a stock operator, we don't want to get in front of a change quite yet. We want to watch to see if where that change goes to. Right. That's why I didn't do anything today. So what did I do today? Unfortunately, I took off a lot of trades. I had a decent amount of trades on, which kind of concerned me a little bit. And yeah, that stung. I'm not gonna sugarcoat things for for you. I'm still very nicely up for the month, but I did take a little bit of a drawdown today in getting out of positions. And the first go of it is where I sliced off about 4 or 5 positions. And then as the day progressed, I took off about another 3 or 4 positions. So I'm mostly in cash at this point. I think I've got 2 small positions left on right now, just to basically watch things. Let me go over the week's performance for you, so that you could see. All right, there you go. That is where, again, I'll zoom in a little bit. SPY down 2.4% for the week. Diamonds down 2.7. IWM, Qs. It's kind of interesting because we really, with the Qs down 3.5% today, we were up about a little bit more than a 1% for the week. So that brought the whole performance down for the week. You could see international was down. As I mentioned, EEM was down. It was down 4.2% for the week. Bonds rallied. Another thing that we talked about, which I'll bring up the chart too, is the dollar being strong. That was something else that to me was a bit of an issue, where we just, again, something that looked different to me yesterday was that the dollar was breaking out, is beginning to break out. Now it was lower today, but still up 1.5% for the week. Bitcoin, I'm going to review that chart in just a second. That was down 5.5% for the week. Value and growth were down almost about the same. Uranium outperformed for this week. I don't know what's going on over there. Metals and mining up 3.4%, which is where I want to go to next. China down 10% for the week. Home builders down 8.6% for the week. That's a really bad week for the home builders. I thought they might bounce this morning because bonds were rallying this morning, but no such luck. That's another thing that stood out too. Before there was any tweets, bonds were really rallying this morning, and I didn't really have a reason for it. So again, sometimes these subtle things that you observe, sometimes they kind of end up adding up to something. So I want to go over. I always forget to go over Bitcoin, so I'm going to go over this chart. This has been really difficult to me. Both like a lot of the cryptos. I am not like crypto trading is not my expertise, but I do like to obviously participate in trends. But I like for people who have made a lot of money in the last couple months or have said like, oh my God, this is a great opportunity in Bitcoin. I haven't seen it all for the last couple months. We've been moving in a range, right? We've definitely come back and this is where it's, I guess if you bought the absolute lows, you're happy. I didn't do that. I don't like to buy things below the 50-day moving average. So that's my rule. I didn't do it. I did get long into here thinking that maybe this begins to kind of trend back higher. And I got caught in this. So that was not a winning trade for me this week. And I think when you look at Ethereum, right, this is the same thing. I heard a lot of people on social media. Again, I listen to social media because I think you can get a good sense of sentiment. And there are some people who put out some really good analysis. But I saw people jumping up and down about how great the setup was in Ethereum. And I'm like, I just don't see it. Yes, this may have been a false break below the 50-day moving average and the whole beach ball underwater as it came right back above, but it didn't go anywhere in terms of breaking out. It tried to break out and it failed. So it's basically back to where it was. So if you thought this was a great setup, I don't know, maybe you think this is a great setup too. I'm not seeing it, but hey, congrats to those who probably think that this is a great setup today, just like they said, a couple weeks ago. That's my take on the cryptos. I wanted to go through just some of the strongest trends that I've been highlighting recently. Yeah, they're taking a breather and a well-needed breather. This is where I think this could be very good for the market. Right, XAR, which aerospace and defense, right, has been just ripping to the upside. This is a huge move that we've seen for this. I'm just going to minimize this so that you could see this. But yes, it got overbought. So let these things come down, right? PBW has been on an absolute tear. Notice what this did today. Well, it took out the VPOC. Look at the volume today, right? Selling. People are taking profits. They're taking money off the table. Next trend, we could maybe go to what? Uranium. Not the best looking candle there, but still above the 5 and the 20-day moving average. What's the other trend that I've been talking about? XME, right? Still holding the 5-period moving average. Would I want to buy here? Probably not. I probably would want to buy down here. I've talked about, let's go through. So, all right, let's, instead of me going to what my conclusion is, I'll wait a little bit. Here's a couple stocks that I'm watching. Remember I said this earlier in the week, right? I said I would love to get Robinhood down here at the top of the value area. I might get that opportunity. I tried buying it in here. I made some money on it. I took some profits, but I got stopped out in the remaining of the trade today, right? But I will try again once we get down here, provided that we hold in here. I was impressed with TEM today, right? TEM, this was a name that I got long a couple days ago. I did sell it because I sold as soon as I started to see things, and I don't like being in high momentum things when the market does start to sell off hard. So I got out of this, but I might be looking at this next week. Right, another one that I'll be looking at. Again, this is what it's all about. Put together a watch list. You don't have to trade everything that's on your watch list. You can kind of wait and see. I kind of would like this NBIS to come in a little bit more. Another one that I'm watching is CRDO. It's been holding that 50-day moving average since it pulled back towards the end of September. I want to see if it still does that. I think this is still shaking the hot money out, but maybe this can come around. but I'm not in any rush at this point. So where am I going with the? I mentioned that I would kind of So that's kind of, I try to frame things for where, somewhat objectively I can kind of tell you in terms of a trend what's going on. Now let me give you some positives out of this. I think a lot of things need to see a pullback. They're just too overheated. And then we can kind of see how we're going to go. Reminder that we've got earnings season that starts next week. The focus, once we get through some of this macro stuff, the focus is going to turn back to earnings, right? And that's going to set us up again. But we're kind of hitting the reset button now. Don't get caught up in whether people are going to tell you that this is a great buying opportunity and we're going to go, what year we think this is. Is it 1999? Is it 1997? It's none of those years, guys. This is it's a new ball game. You could try to compare it. Remember, some things with history, they rhyme. Yes, there's lessons that we could take away, but they never play out the exact same way. Why? Because there's different circumstances in each one of those. The valuations were different in 1999. There's a whole bunch of other factors. So don't get caught up in this nonsense about what year it might be from 25 years ago. I traded through some of those years, just like I traded through 2007 and 2008. And people try to compare 2022 or 2022 to 2008. That didn't work either. You know why? Because it's a different situation. So watch what happens in front of you. Watch to see if names are still going to put out good earnings. Watch what happens when we get to support. My feeling is that we need to come down a little bit, but yes, there could be some really good buying opportunities, but they don't have to happen right this second, right? They could be right now. We're getting in the middle of October, right? We've got a lot of the year left. Think more than one day ahead. Think about a couple months to the end of this year, what you're looking to accomplish. How are you going to do it? Is it jumping into every trade that you see right now with the market coming in? Probably not. But anyway, that's my thoughts. I'll have more for members this weekend. I look forward to it. It should be a very interesting next week as well as next coming months. Have a great week.